Okay, let's get started. Okay, so
Oh, I lost.
is everything okay?
Yeah.
Okay. So I think you all know me. So I'm Gregory Page Rummer. Okay. And now a BFA. As of this week, I am a BFA, a behavioral financial advisor, which I'll explain in a minute because it's kind of related to this.
Congratulations.
Yes. Yay.
I was up till 2 in the morning the other night taking my test. It was a little longer than I anticipated. Okay, so disclosures. It's read through all this, but so I'm with Open Vistas. Open Vistas is part of Royal Alliance, which is part of the advisor group, and there's no guarantees about anything. But we're not talking specific things anyway, so just the general disclosure. Okay, so what are we doing today? Introduction. What is MyBlocks? Doing a demo, a workshop, and some questions. Okay, so me. So my job here is to, my professional life's work is to empower people around their finances, right? So help them build wealth, create security, and enable their dreams. I got a website, so go on out there. There's a lot of stuff, including MyBlocks out there. So that's the place to go to get all this information. And I have a ton of information also about all the stuff that's we're talking about. It's all out there. Okay. So what is behavioral financial advisor? Okay. So key thing here, financial success has more to do with your behavior than investments. Everybody thinks it's, which stock should I buy? It's really what you do. When do you start saving? When do you start investing? And do you jump in and out and all those things? So I think 80% is your behavior, 20% is investments. Also, you have to be ready for the certainty of uncertainty, right? The market's been going up a lot the last few years, but as you know, last year kind of crashed. So everything's uncertain right now, right? So the only thing certain is uncertainty. We can't predict the future of the market, but we can prepare for it. That's what a BFA does. You prepare for whatever happens. A big thing here is aligning it to values. I actually have a whole deck of cards, so you can see a whole deck of cards to go through to determine your values, and I'll show you how that all gets aligned. And there's the smart money philosophy is no matter what happens, if you follow the right path here, you're to have some smart money available to you, no matter which angle you end up down, which we'll go through in a minute. Okay, so first is the alignment model. I just showed you the cards. Left-hand side is your ideal self. Right, so this is your principles, your values, your beliefs. On the right-hand side is your real self. That is what you do, which may not be totally aligned to your ideal self. Especially when people get nervous about the market, they kind of behave different than their ideal self would want them to be. In the middle, we have goals. So how do you get from your values to your goals to act like you want to do with your goals? Okay, so this is the smart money philosophy. This is a very, very simple version of it. So you have to prepare for these things, right? So what's the first thing you need to prepare for? Death. Okay. Sounds terrible, but that's usually the biggest thing that's going to impact you and your family, is if you die an untimely death. So how do you, handle that? So what do you do about death, right? You have life insurance, you have wills, you have guardianship for the kids if you have kids. So, this is all part of financial planning, right? You have to have all this stuff in place. It's not just what stock do I buy. This is all part of financial planning. Okay. So the other side that we like better is living. Woohoo. Okay. So you say you're still alive. Okay. Next thing. So first thing there is sickness, injury, disability, accidents, right? So how do you handle that stuff, right? So disability insurance. What is your biggest asset, especially when you're younger, is your brain, right? Your ability to work, your ability to make money. It's not your 401k or your house, right? It's normally your ability to bring income in. So you need disability insurance for that. What else if you get really sick? Long-term care insurance, right? Health insurance, health, like nursing homes, all that kind of stuff is crazy expensive. And now so are long-term care policies getting expensive. As a few of you know, you've been through it. There's also life insurance with long-term care riders. There's different ways of doing that. Okay, and let's say you're alive, you're not sick, you're healthy, so good health. There's two things, right? There's poor markets, weak economy, and strong markets, strong economy. How do you handle those situations? Right, so that's all a part of how you behave. That's all part of the BFA, and that's what I would work with you on, all these different angles. Okay, so that's big picture of financial plan. So MyBlocks. So what is MyBlocks? It's a way of doing financial planning. Okay, it's an online financial planning tool that you guys will all have access to. It's free. So I got it so everybody can get it for free. And it's a way of doing it, breaking it up into easy to understand little blocks. So it's like, which credit card should I pay off first? You don't have to do a big plan. You can do little snippets of a plan. And then you learn things and you put them all together, by yourself or with me. You can use MyBlocks by yourself. You don't need me, but I'm available. There's like a little button you can click on, give me the code, and we can be on together. I can watch what you're doing. I can take control. We can even look at each other if you want. So, there's lots of ways I can help. Or, when you get it all done, you can come to me and we can take a look at it and figure out how to make a big plan of it. So it's your finances, your way. Okay. It's all little interactive modules, which I'll show you. Okay. So
Greg, can I interrupt for 1 second?
Yeah.
I just want to say, I don't know what I did. I made myself disappear on video. But I am here. I just want to say that I don't think my picture is even showing. I don't know what to do, but I am here. Just wanted to say that.
Oh, you're Doria Lee again.
Oh, you see me?
Yeah.
Yes.
Yeah.
We see you as Dory Lee.
Oh, well, I can't even find myself, so you'll have to live with me as Dory Lee. Sorry about that. But I'm glad you could see me because I can't see me. I don't know what I did. Okay, sorry to interrupt.
No problem. Okay. Here is a quick little video from InvestNet who put out MyBlocks. So just give you an idea what it is. Let me know if you can hear it, because hopefully you can hear
it. It's good.
An online financial planning tool, MyBlocks presents key topics into easy-to-understand blocks, making planning for your future easy and fun. Access MyBlocks on any device with a browser, and once logged in, scroll through and find a block that interests you, or start off with blocks suggested by your advisor. When you want to start a block, simply click the play button. Every block contains a series of questions or prompts that help you better understand your finances and what you can do to achieve your goals. There are blocks for every life stage. You can create your personal vision for your financial well-being by exploring blocks unique to your situation. You can even get your children involved. Help them understand financial literacy concepts like inflation, interest, and investing. As you complete blocks, your advisor can connect the dots, helping you develop your financial plan. It's time to have some fun and start building your future with MyBlocks.
Okay, that's your little marketing promo. Okay, the blocks kind of shot by, so just give me an idea. You can, create a personalized financial plan, measure financial health, create a budget automatically. Actually, create the budget for you, make it nice and easy if you let it do that. Create emergency fund. There's a bunch of things that it'll do. So I can show you these. I just wanted to give you an idea of what the options are here. Okay, so let's jump into a demo. So these are the sample clients, just to give you an idea of, I actually created a plan for Jane and John Doe. So Jane's 45. I made Jane the engineer and John the teacher, making more money because it's always the other way around. She's got a 401k for 120 grand. She's got a 401k for 50 grand. They both put in 10% a year. She's got student loans at 25. He's got student loans at 30. They're both going to get $10,000 pensions when they retire. Most people don't get pensions anymore, but and she has a health savings account for $10,000. They have 2 kids, Jen 13 and Jimmy 10. They have $23,000 of credit card debt. They have $10,000 on a credit line, Their house is worth 350, their mortgage is 150. Jen has a 529 for 40, Jimmy has a 529 for 20, and they have 10,000 in the brokerage account. So, what can you do? Let me jump in here in a second. Let me jump in here and show you what we can do. And I got logged out. So MyBlocks is part of there's a bigger tool called Money Guide Elite, which I have access to, and MyBlocks is just a part of that to help people do it themselves, make it easier. Okay, if you notice here, the first thing it's saying is, do you want it to update? If you use the Yodlee part of it, it actually, if you let it, you give it your ID and password, it'll go out there and grab all your information every time you bring it up. So it's all up to date. Okay, so go to MyBlocks.
Greg, what should we be seeing right now? I think maybe I'm frozen.
We should be seeing, there you go. It was me. You see it?
I see sort of your PowerPoint, like the full screen of it.
The sample
Oh,
client.
then hold on, wait, hold on.
Slides are along the left.
I'm on the sample client.
Sample client is on there.
So we switched over. Okay, hold on. Let me switch. Thank you. I'll
Oh,
switch
that's
over.
true. So you should be full screen. You should go full screen.
It seems like it's on the wrong side. Let me, okay, hold on. Let me go into Zoom. Thank you for letting me know.
Or maybe slideshow.
Yeah, go to slideshow and then presenter. I'll come on this.
I thought it was showing the screen, not the,
I think it stopped showing the show and it just went back to your file.
oh, I see. Here we go. Let me go here. So new share. New share. What's this new share? Okay, is that good?
Yes.
Woohoo. Good. You got it? Yeah. Okay. Okay. You should see MyBlocks.
Yeah.
You can see.
Yeah.
Good. Okay. So just to give you a quick idea, so these are the MyBlocks. There's a plan builder block, there's fast path of financial wellness, there's strategies, have some fun, retirement topics, protecting your family, financial vision, Yodlee, and financial freedom. There's lots of blocks out here, guys. So
Excuse me, Greg. And you said there's no sequential movement through. It's kind of more select the blocks, or
it's really select the box, but if you want, to me, the best way to go is my plan builder, these first few blocks, because that really sets up everything. So it's really
Okay.
kind of the best way to go through it. So you don't have to go sequentially, but it kind of makes sense, right? Your goals, your investments, your risk tolerance. So a little black check mark means I've been in there. This shows you what you've been and have not been. So you just mouse over it and click the little red button. Now, again, I set this up. This is Jane and John Doe. Okay. So let me start at the top. Okay, so you just go through and you use these little, these little, just move people around here. This is when they want to retire and when they expect to pass away. And you can actually, if you look at these boxes here, you can actually, it comes up with this by saying, if you say you're a smoker and you save it, it went from 94 to 86.
Okay.
So,
Stop
it
smoking.
uses information. So don't smoke. Just check Take 6 years off your life right there.
There should be a link to one of those god-awful New York State Department of Health commercials with people smoking.
Right, right.
So here, so when do you want to retire, right? Maybe retire 62, or you want to retire 65. You just move it around. Okay, so that's the first part of it.
And I suppose everything is secure once you put the information in.
Yes.
Not Florida.
Sorry. Okay, I'll go to Arizona. Is Arizona any better?
It couldn't be worse.
I'll go to Hawaii.
Okay.
Okay.
It's expensive though.
I know. You can stay in New York if you want, but this all factors in, because cost of living, this all factors in, believe it or not. It's not just a question for the fun of it. It actually factors it all in there. Medicare, it really does everything. Again, so that, you can do it when one of them retires, but they're probably going to do it together. So when both retire. Okay, so you're wondering how would they end up having $175,000 a year living expenses, right? So that actually, I'll show you, is another block. It's based upon salaries, and they take, what is federal tax, state tax, all that kind of stuff, and you end up with $175,000 a year. Make sense? Then when you retire, it takes 80% of that. You can change these numbers. It just defaults to 80% of your. It's a little weird. The more money you make, the more money you need in retirement. So you may not agree with that, but that's what they use there. Again, you can edit anything you want here. That's just what we looked at there. Okay. So next, again, these numbers can all be changed. This is what expenses, so mortgage alone, but I think I already had them all ending, but so if you still have a mortgage in 2043, you can say this is going to end then, because it factors that all in, right? Takes everything in. Healthcare expenses, okay. So how much are you spending? This is the cost for Medicare. So I actually sell Medicare, so I have a lot of knowledge of Medicare. If you have any questions about Medicare, I can kind of go over the costs of, what A costs, what B costs, D costs, C plans, and all kind of stuff. So once Jane passes away, what is John paying? Because she passes away first, according to the plan. Okay, so personal goals. This is where you set up all your goals. Okay, so I put in there retirement and healthcare. Those are kind of the two big ones. Let me go to the next page because that's where they all are. So for goals, there's other options too. If we add a new one, you can see they give you lots of options. So these are your needs, what you need. These are what you want, and this is what you wish for, right? So they kind of because when they're figuring out if you don't have enough money, what goes out first. Obviously, it's the wishes, right? You're not getting a new sports car. You're going to fund the college, but you're going to, have your retirement plan first. So again, you kind of just move it around. If you want your sports car to be a need, just move it over there, and now it's a need. But I would recommend not doing that.
Mm-hmm.
Now you go in each one of these guys. Right, so you can actually take a look at it, and your living expenses is when you're still working, and then when you retire. Cancel that. Healthcare. Again, it's showing you actually, if you look at it, you can actually look at the descriptions of it, but it kind of shows you what's going on with that. The SUV is, they want and so 2024, Jane wants a new SUV every 5 years, and it's a need. You may not agree, but that's kind of what it is. Again, so college plans, if you have any kids in college, when does it start? Average cost, this is for a private college. If you want, you can do public out-of-state college. I think it'll show you here. So it's 40, private college is 55 a year. Public out of state is 44. You can go public in state and it goes much cheaper than public out of state. Okay. If there's any other something, if you're getting scholarships, loans, you can put all that stuff in here. And travel, they want to, every year they want to spend $15,000 on traveling. When both are retired. This is kind of their retirement plan, right? So it's when they're retired. Yep.
Greg, can we go in and utilize that if we're already retired? Just change dates?
Yeah, totally.
Yeah.
Yep. I'm not going to go through everything because, we don't have a lot of time. So in the end, they kind of show you everything all put together here, right? Again, what's needed according to you. What are your needs? What are your wants? And what are your wishes? They kind of show you the year's expenses. And this shows you your goal timelines, so you can see, how it all stacks up against each other. These little dots are because it's a new car, right? So that's why it's every 5 years, whatever. Here they want to buy a vacation home. That's just a one-time thing. So unless you get a mortgage, which is a different thing. And then also expenses over time. This gives you a little chart showing you, so that's retirement, that's healthcare, that's your SUV, right? College, travel. So this kind of, can look at everything or just mouse over it and you can see that very specific thing. Okay. So those are your goals. That's why I start with this top one in my plan, because it really kind of puts together a plan for you. Sorry, it's a little slow. Okay. So investments. So those are your goals. These are your investments, right? So I showed at the beginning, right? So Jane has a 401k for 120, and she's putting in her max. John has a 403b teacher. He's up to 52. He's putting in his max now. The plans for 529 plans are putting 12,000 a year. The HSA, and they have a brokerage account. This box here is very important. If you want to let them do it, you can, you have a Schwab account, you give them your Schwab information. It'll go out there, grab all the information and bring it back in for you. You don't have to type anything in. It'll go out there and grab it. And when you get back in, it'll go grab it again and refresh everything. Some people are concerned about security, obviously, by letting Yodlee do that. I actually, in my previous life, I was a tech guy, and I actually went out to see Yodlee, like 15 years ago. I actually was looking at, using their technology, and I went out there to their offices in San Jose and actually looked at their tech, looked at their security. They actually brought me into the back room with all the locked doors and bolts and everything, and I got to look at their tech. And 15 years ago, they were pretty secure. I don't know what. What's that? Okay. Marty's here. Okay. So you can do it just throw in a total here. You can do summaries, or you can add exact specific investments, which is good to show because then it knows, it like looks at all the information and knows what to do with it as far as, is it value, is it growth, is it, all those things. So it's better if you put in the actual investments, but that's a lot of work unless you use Yodlee. Now you have your goals, your investments. Yeah.
Does Yodlee also pull in the asset allocations?
Yeah, it pulls in everything. It pulls in all your holdings. So it knows.
So it knows how you're.
Yeah.
Investing.
It knows how you. It knows, unless you have weird things. If you have standard mutual funds and stocks and all those things, it knows how to, what asset, what category they're in. It'll show you in the charts too. Okay. So the next important thing is risk tolerance. So your investments are based upon your risk, right? So here I gave Jane a risk of 72. They're saying based upon that risk, your investments are based upon your risk, right? If you have no risk, you're like buying mutual funds. There you go. Okay. So capital preservation. So the recommendation it's going to make is to buy mutual. money market funds, right? CDs, money market funds. So it's capital, you don't want to lose any money. But if you're like crazy, you want to buy Bitcoin, 100% Bitcoin, it shows you equity growth. So showing you here, you're 100% in stock, your average return should be 7.13%. But from 2007, 2009, you would have lost half your money. You're taking a lot of risk. But this actually shows you if you go down here to 2% or 1%, it's only 28% in stock. So your return now is 4% versus 7%, but you only lost 4% in those bad years. So it's all based upon, right? Your risk is based upon, your returns are normally based upon your risk. Not always guaranteed, but just in general, the riskier you are, the higher returns you get. So we do that for Jane, do the same thing for John, right? They don't have to be the same, right? John is less risky. And then you do it together. This, if you're a couple, you don't have to do it as a couple, but if you do it as a couple, you got to come together on something in the middle. This is showing the two different ones, and it's showing you, so it says total return is kind of the 61% in stock, and you should expect a 5.57 return. Does that make sense? So your returns are based upon your risk tolerance. I'm going to run out of time here. Let me just quickly show you. Okay. Do you have retirement income? They have other assets. They have liabilities. So they take everything together. The one in the middle here is kind of really important. Once you do the ones on the sides, this is the play zone. So this, if you take anything away, take this away. Get to the play zone. Fill out the other ones. But the play zone is going to show you your chance of success. So right now, they have a 0% probability of this working, right? This is, if she retires at 65, he retires at 62, they have $175,000 of basic living expenses. Their health care is, 100% of 13,000. They buy an SUV every 4 years. The college, 44,000 versus 55,000, right? So it takes everything you put in. Travel, 15,000 a year, buying a sports car, right? Having $10,000 a year of fund money, buying a $200,000 vacation home. With, this is 401ks. This is even maxing out your 401ks. But this is using the return, right? This is the 63 that we had, the risk return. That's you. So if that's what your risk is, you're going to be invested in something that returns about 5.57%. If you put all that together, you're running out of money. Okay? It's not going to work. Okay. So what do? This is the play zone. So you start playing. You start moving things around. Okay, well, maybe you don't really need a vacation home. Take that out. Now you have 1% profit. You got rid of your...
Greg, if I could just interrupt for a second. I'm not sure if you're seeing the questions, but somebody asked how is that, she says she's in, Nancy says she's in Canada, and would this program link with Canadian financial rules, regulations, and systems?
That's using this tool is not going to be changed, but I can't help her. It's Canadian. The rules aren't different. The rules are all the same. I just can't be a financial advisor for somebody in Canada. But she can still use the tool.
She can use the tool. Okay.
We can talk. I just can't say buy this thing because I can't be your advisor. So, good question. So fund money. Okay. Remember at the beginning, I said the most important thing is your behavior. Your behavior means when you start investing, when you start saving, all those things, and when you jump in and out. The earlier you start saving, the much better chance you have of succeeding later in life. It's just, that's like the most important factor. But you are what you are. You did what you did, so you got to live with what you have, right? So let's. So I'd say the biggest one right here is just $175,000, right? That's kind of expensive. So let's knock that guy down. But you're not going to need $175,000 a year when you retire for basic living expenses, right? I'll show you how to look at it. I can get you the exact number. Well, you have to get your exact numbers, but I'll show you some other blocks to help with that. So let's knock it down to 80,000. %. So that helps. That was a big help. Let's get rid of the sports car. Sorry. That's 37.
This is slow going for this couple.
Yeah, it's it's if you don't have enough money saved, again, so you don't want to do the college funds unless you want to borrow money. Travel. Do you need really 15,000? About 5,000 a year. Again, this inflation is factored in here, right? This is this year. Inflation, it's all factored in. So it's not 5,000 the rest of your life. It's 5,000 today, but next year it's a little bit higher. It goes all, so it all goes up higher. So we're up to 50%.
They factor in.
Let's knock your SUV down to 25. Maybe not buy it every 4 years. You can go back and change all those things too. But this is playing around. So you get the idea, right? So
Yeah.
Play zone is the very important part, because this is where you see if it's going to work. And if it's not going to work, what do you have to do to help it make it work? Maybe even, they'd be a little riskier, but that's, you don't want to be up and all night either. So your risk is your risk, right? You can't really change your risk. So you got to be careful playing with risk. If but you kind of have to work it. If you're a couple, you kind of have to work it out together. So, okay, that's a very important thing, is the play zone. We're almost
And
there.
Greg, the box that says recommended scenario, that the software is going to come up with the changes they think make sense.
No, this is as you start moving things around, right? It's you have to do the playing around here, right? I mean,
Okay.
You got to start moving things around because they don't know which one's the most important for you. I mean, they would probably take out. Oh yeah, I still have fund money. Get rid of fund money, right? So in theory, you should start taking out the bottom ones because those are the wishes. Yeah, 79%. Okay, so now we're right in the green. The reason you don't want to be 100%, the blue box here. The blue box is you're probably being too cautious about that. It's like, so you cut, things change. You want to be in the green. So here, so we did it. Woohoo! This now, this is going to change not a lot tomorrow, but this is a point in time, right? But this tool is use it all. I wouldn't do it every day, but quarterly, semi-annually, annually. And again, I can work with you on this, right? You can do it all yourself. I can do it with you. When you're done with it, we can talk and say, hey, this is what I think. Is this good or not? Does that make sense?
Mhm.
Okay.
Yeah.
So, yeah, I'm going to save as the client favorite. They may not like it. Okay. So,
And Greg, you said they factored in the inflation. How do they do that? What are they figuring percentage-wise with inflation?
that should be, hold on, that's we have that. That should be one of the numbers. Let me see if I have it here. It's a good question. Where I was thinking the same thing myself. Where is that number? It's definitely a number that's in here. It may be at the beginning here. Okay. Oh, really? I can't. I thought I was going to be able to see. Okay, when I pop in the next one, I'll take a look. So the top, to me, the top is very important because it really gives you a plan. These other guys are bits and pieces. So for instance, emergency funds. This is going to show you. So they were making 300, they took out all these taxes. Remember that it started as 174,955. This is how they got that number. Okay, so but it's going to, if you don't have an emergency fund, you can say I want to do it in 3 months or 6 months or 12 months. Actually, okay, I was going to do a poll. I'm not going to do the poll. We don't have time. What does everybody think a good emergency fund is. This is just in general, your situation may differ depending on your whole situation. But what do you think is a good thing for emergency funds? How many months of
1
expenses?
year?
Usually
1 year?
6 to 9 months,
6.
but depends on your situation. You know, if you're very much paycheck to paycheck, maybe it's more of a year. If you're retired and you have your fixed income is higher than your expenses, it doesn't have to be as much, right? So, but this is, you know, I want to do it in 3 months, I want to do it in 6 months, I want to do it in 12 months, right? It's you decide all the stuff. Well, this is what I wanted to see. I will find out that question because I forget where I put in what the inflation is. Okay, so let me go back. So these blocks below are more specific. You know, the ones above were kind of big picture. The ones below are kind of like, you know, I need an emergency fund. I need life insurance. Which credit card should I pay off first? Right. So retirement in HSA, how much should I save? Student loans. We don't have a lot of time, right? Okay. So I like this next best dollar. The next best dollar takes a lot of stuff together. Okay, your emergency fund. If you're not funded yet, it's going to look at that. It's going to pay off credit cards, pay off student loans because they had student loans. It takes all of these together into account and says, how should you handle that? Which should you be paying off first? Right? It takes everything together and looks at it. Should you be funding your retirement fund or your HSA? It takes it all together, right? Any upcoming goals. It does all that, you know, takes it all into account and comes up with this is what you should do. You should, you know, the emergency fund. There's usually a little chart here. Yeah. But if you look at one of these things, it shows you how to do the funding for these and each month how much to put in. So, you know, it's a good thing altogether like that. Let me just give you a quick little okay. I was going to walk you through how to get signed up for this, but I'm just going to even give you an idea here. So, right, student loans, retirement funds, upcoming goals. Go down here. Mortgage refinance. If you didn't do it already, it's too late now. The rates are up. Structured investments are annuities, that kind of stuff. We can talk about that later, but let me just pop into it really quickly. Actually, just it's easier with a picture. Don't know if you guys know anything about these type products, but yeah. So a structured product will give you upside participation. So you make money as the market makes money. Downside protection, so you can only lose so much or zero, depending. There's many options here. You know, you could lose zero. You can't, you know, if you want, and they pay out at maturity. So there's different ways. They give you lifelong income if you want. You can do it so you can get like almost your own pension. It's like a personalized pension if you want. There's lots of different options here. So they kind of pop through those things. But that's you kind of probably better talk to me about those things because it's specific products and there's lots of different things. Can I go back here? So you see there's tons of blocks you can play, but if you do those top blocks first, it really helps fall through to the rest of the blocks. So life insurance, how much life insurance should I get? Okay. If you make $100,000 a year, again, very rule of thumb, doesn't mean anything. Everybody is different. But how much life insurance do you think you need? Say you're married with kids and, you know, have a mortgage and all that stuff, you know. Any guesses on, you know, rule of thumb, back the napkin, how much life insurance you would need?
5 times as much, 500,000. I don't know.
Some people say 5, some people say 8, some people say 10. But you got the right rate. So, okay. So you guys took my poll without me using the poll, but that was good. Whoever said that, that was good. Retirement, some of this stuff is supposed to be fun, right? Retirement bliss is you click on this and you know, let me just do it quickly here. This is like more fun stuff. I don't know if it's going to be fun, but I can't do it. But yeah, so it's here. You as a couple, so what does Jane want? So Jane goes in here and she says, I want to not work, I want time to travel, and I want this. And then John does it, and they do compare it together and see when they're retired, are they in the same wavelength, or they're like looking at different things? So, yeah, it's supposed to be like fun type stuff. There's an inflation thing, how much did a Mustang cost back in 1960? What does it cost today? What's going to cost in 2050? I forget the years, but it's just showing you inflation, what it really means for different products. Yeah, it's gonna have a few little fun things in there, but so retirement concerns, like what do you care about? For retirement forecasts, you put a lot of stuff in there. I don't think this one came down from above. Most of them come, I don't think this one came down. Social Security, when should I take Social Security? If you're a couple especially, do you wait till you're 70? Do you take it at 62? What is the difference in money if you, what a healthcare costs, your life expectancy, or you saw it if you smoke, those things, right? Inflation, long-term care costs, how much is it going to cost for long-term care? Yeah, let me do that one quickly just to show you. It's a good one, right? So, so for Jane, if she needs home care, she needs a nursing home when she turns 80 for 3 years. We'll say New York, we'll just say average New York state. So for 3 years, it could be $2.1 million. When she turns 80, and not today, but when she turns 80, right? She's 45 now or something. So, 40 years from now, it'll be $2.1 million. So you get numbers. So again, we can talk about, I do all insurances, I do disability, long-term care, life, I do all that stuff, because it's all one thing, right? It's all, financial planning is everything. It's not just what stock to buy. It's all that stuff together. So we only about 10 minutes left. I don't want to keep you late. So I do want to show you this one quick thing, and then I'll show you how to actually sign up for this thing. Again, it's free. Don't worry about that. You can use me. You don't have to use me. You can do it all on your own. Again, there's life insurance, and will I have enough money? This one's actually pretty cool. Let me just do a show quickly. So they're both employed. When they're retiring, they're not smokers. They get Social Security. They have pensions. This is to maintain a current lifestyle. They should need $14,000 a year. So they have 170,000 in investments, 100% and qualified, like IRAs, 401ks. They're going to put for 35,000 a year in. If they're moderate investment style, it shows you here, right? Stock 54, bond 42, cash. Again, that's those bad years went down 21% with this moderate investment style. And it shows you here, the little charts here shows you your short, well, a little more, yeah, a little too far. Okay, they're showing you, all their different expenses and how much their gap is. Okay, so I do want to show you this. If you're interested in like budget stuff and how much I'm spending and categorizing it and all those things, the yield stuff at the bottom here goes out, grabs investments too. It goes out and grabs all your investments, brings them back, does asset allocation with them, shows you all that stuff. It's all the stuff at the bottom. This is setting them up. It does summaries. It shows your transactions. It makes your budget for you. It goes out, grabs all that stuff, brings it back, categorizes it, and says, this is your budget, right? Your expense analysis, okay to spend. This is my budget. This is what I'm doing. Can I spend, $20,000 on a new car? It'll tell you yes or no. So that's all in here, right? So investment holdings, your net worth summary, cash flow. So, okay. It's got a lot of stuff. But it's good. Okay, so let me show you. Okay. Oh, hopefully I'll send out the slides, but let me show you how to get into MyBlocks. So you go to my website. I top my website here. You go to MyBlocks. Just the video I showed, it shows you a bunch of different things. Actually, I didn't show you this, but it shows you for teens, they may want to do this, early career, mid-career, late career, retirees, all these different things. Yeah, there's different blocks for different people. You can use them all, but some blocks are more important for other people. Oh, before I forget, so these are the blocks, right? So I just showed you my plan builder, right? We went through all and it explains what it is and how long it takes, right? If you want to know money management, these are the blocks for money management and how long they take if they have an estimate, right? So that you can pop through these, right? Retirement, these are the, so it just shows you all that stuff. But to get in here, you click on any of these start now buttons, or even if you want to, you can go that way and click start now, or you can just go to up here to log in and you can say register. Okay. So let me actually go back to the slides because I don't want to pick a whole new person. It'll take too long. So let me go back to my slides. Can you guys see that, or is it get knocked out again?
Yes.
Okay. So it's just showing you. So yeah, okay, showing you. So register. Fill out the stuff. Click on register. Then you log in. You click text message unless you have like Google Authenticator, but text message. This is key. You got to click the send text message button. Otherwise, you won't get the code. It's really weird. I don't know why they do that. It's very annoying. Click that button. You get the code on your phone. You type it in. And you're in. Woohoo. Okay. This just shows you quickly the different groups I showed you before. And these are just the gory details of all the blocks. Okay. So next steps. What time are we? 5 minutes, good. Okay. So next steps. If you haven't, I was going to walk you through, but we didn't have time, so nobody's done it yet. But so go to my my site, openvistasfinancial.com, and sign up for it. Understand when I pop you through. Actually, I didn't show that part. Okay, if you go to any of those like money management things on the top page, you'll see if you go to any of those subjects like retirement, investments, insurance, go in there. There will be videos, there will be presentations, there will be documents, there'll be downloads, there'll be calculators, all these articles. So there's tons of stuff, information on all of those different topics out on the website. So you can go look at all that stuff. Nothing to do with MyBlocks. It's just if you want to know more about it, it's a place to go to get a lot of information. And if you click on view all articles, it shows you every category with every article. It's got a lot of stuff out there. Okay. Okay. That was a lot of stuff. So any questions?
It's great. It's very comprehensive and thorough and looks like an interesting program.
Yeah, no, I like it a lot. And I like it the fact that you can, I'm looking sideways here, right? Let me bring this over here. So I'm looking at you guys instead of sideways. I like it because, why should I do it? Because it's, like I said, it's very thorough, but it's also, I'm doing this, annoying. Okay. It lets you do it all on your own. It also lets you bring me in during any of it, or even when you're done, and say, hey, I got this, all these things now, what do we do with it? Right. So you can do it on your own, or at any point bring me in, which is good. And you can always email me, Greg at openvistas.com. And if you get stuck anywhere, sorry, openvistasfinancial.com, which I'll get to in a second here, actually. Okay. Again, you can also do a free consultation on my webpage. All over the place, it says book a time with me. Just go there. That's my calendar, so you can book a time with me. Okay. So consultation will review your values, goals, needs, dreams, understand your big picture for finance and insurance, discover ways to help you get to where you want to do and build a plan. And so here's my website, my email. I'm on a lot of social media stuff, Facebook, LinkedIn, Instagram, really not much. YouTube, I got YouTube out there now, my cell phone and my calendar.